Hello everyone. In continuation to our topic budgeting, this is question 17. The following details apply to an annual budget for a manufacturing company. Quarter 1, 2, 3, 4 working days are given 65, 60, 55, 60. Production per day is given 30, 25, 40, 38. Then raw material purchases are given, percentage given by weight of annual total. Budgeted purchase price per kg in rupees is given. The unit quantity of raw material per unit of production is 2 kg. The budgeted closing stock of raw material is 2000 kg. Budgeted opening stock of raw material is 4000 kg. Cost for that opening stock, the cost is rupees 4000, means per unit it is 1 rupee. Issues are priced on a FIFO basis, first in, first out basis. Calculate the budgeted figures. First part is quarterly and annually purchase of raw material by weight and value. Then closing quarterly stocks by weight and value. Now let us proceed with the solution. First of all, we need to find out the production. Production is given per day, 30 units per day. Working days is given as 65. That means here it is 65 into 30, we will get 1950. The next one, quarter 2, it is 60 into 25, we will get 1500. Here it is 55 into 40, we will get 2200. Here it is 60 into 38 for quarter 4, it will be 2280. Here it is said that quantity of raw material per unit of production is 2 kg, which means for 1950 kg, it will become 3900. Here it will be 1500 into 2, that will become 3000. Here it will be 4400, double. Here it will be 4560. So if we add the total raw material requirement, that is 3900 plus 3000 plus 4400 plus 4500, we will get 15860. Now, we know opening raw material plus purchase minus closing raw material will be the total raw material requirement, which means purchase will be raw material requirement plus closing raw material minus opening raw material. That will be 15860 plus closing raw material. Here it is given, yeah. Closing raw material is given as 2000, so minus plus 2000 minus opening raw material is given as 4000. So which means the purchase quantity will work out to 13860. Now, for each quarter, let us identify this. How much to purchase, what should be the rate per kg, and how much is the purchase value. Here they gave us the weightage. Raw material purchases in first quarter should be 30%, second quarter should be 50%, and third quarter should be 20%. On that basis, we will now write down, for example, here we have the total purchase quantity as 13,860. In that, what will be the 30%? So 13860 into 0.3, we will get 4158. Then for quarter 2, 13860 into 50%. It works out to 6930. Then quarter 3, it is given in the question as 20%. So 13860 into 0.2. 2772. Quarter 4, nothing. Then rate per kg is given. For first quarter, it is 1 rupee, 1.05 and 1.125, like that. Here it is actually not given, sorry. So only the first 3 quarters prices are given. So first one, it is 1 rupee. Second one, it is given as 1.05. Third one, it is given as 1.125. If we multiply, the purchase value will be 4158. Here it is 7276.5. Let me rewrite that. Seven two seven six 5. Then 2772 multiplied by 1.125, we will get 3118.5. Now, here rate, we know it is, I think we will add some more values here, from some more rows here. One row, we will do it for opening stock, opening raw material. Then raw material requirement, we will calculate the closing raw material. So for the first one, the purchase value will be 1. So we can write the value as 4158. Here it is 1.05 and rewriting the value as 7276.5. Here 2772.0, 1.125. 3118. So that means we need not have these two rows because I wrote it already there. We can delete those two rows. We can even delete this last column. Okay. Now, we have the opening raw material given in the question as 4,000 at a cost of 4,000. There will be 4,000 the cost of 4,000, which means per kg rate is 1 only. Raw material required in the first quarter is 3,900. And the issues are happening on FIFO basis. That means it will be at 1 rupee only. We get 3,900. So the closing stock here, it will be opening raw material plus purchase minus requirement, we will get the closing raw material, which is 4258. Value will be based on 1 rupee only, so 4258. Then here, opening raw material will be the closing raw material here, which is nothing but 4258 at 1 rupee. 4258. Raw material requirement for second quarter will be 3000. And since it is issued on FIFO basis, opening raw material, whatever is available, that will be issued, which is at 1 rupee. So we get 3000. So the closing stock will become now 8188. Here, if we calculate, that is opening raw material value is 4258 plus 7276.5 minus 3000, we will get the value as 8534.5. Now 8534.5 divided by 8188, we will get 1.04. So here our opening raw material will be 8188 at 1.04 at a value 8534.5. Raw material required in fourth quarter is 4400. Since it is issued on FIFO basis, that will be at 1.04 only. Value for that will be 4586.2. Now, opening raw material value is 8534.5 plus the purchase value is 3118.5 minus the raw material requirement is 4586.2. We get 7066.8. And here the quantity $6560. So the rate per unit will be 7066.8 divided by 6560. We get 1.08 approximate. So here nothing. Opening raw material is the previous quarter's closing, which is 6560 at 1.08, valued at 7066.8. Required raw material for quarter 4 is 4560. And this will be issued from the opening raw material only, which is valued at 1.08. If we calculate 4560 into 1.08, we get approximate 4912.3. Closing raw material is given in the question as 2000. It is matching 6560 minus 4560. So that also will be 1.08 valued. So 2154.5. So that is the solution for this particular question.